There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Tuesday afternoon. Nice to be here with you. I missed you yesterday. Look, it's just past 4 p.m. here in Sydney, so we'll get you across all you need to know as the curtains come down on this Tuesday session. Here's a prettier picture than the one that we put up yesterday. The market was down 0.8% today, recovering some of those losses. The COB Australia index is up by 0.25%. You may thank the miners in the resources space for that, generally speaking. I mean, into some of the, the energy stocks, that includes coal, looking all right. CSL putting on about 1%, Macquarie as well. But really, if we're honest, it's BHP lifting this market higher in terms of its market cap, up by 2.2%, along with the gold miners. Boy, have the goldies been doing well as of late. But it also reminds me that our stock of the day is a bit of a different take on the precious metal complex. So just to tease you, make sure you stick around. We are watching the ASX, obviously, with much interest. I'll bring you across the final figures a little bit later in the piece, but safe to say that we are seeing a bit more enthusiasm in terms of investor sentiment, a bit of a back down, perhaps on some of the really strong language around trade coming through. And in New York, we are watching the NASDAQ E-minis and the S&P 500 E-minis coming under a bit of pressure. So one to watch. Also watching Japan today, that's come under quite a bit of pressure. The big story out there, though, continues to be rare earths as we continue to feel those trade tensions between China and the US, putting a lot of emphasis and a lot of attention toward the likes of Lynas. I mean, really, Lynas is a processor and they are rare as hen's teeth outside of the United States. Now, Paladin, for one, doing pretty well off the back of some production news. It has achieved record uranium production at its Langer Heinrich mine, and that's despite some of those weather issues that it had a little bit earlier this year. So looking at some of the sectors and some of the outperformers, I think I laid it out and probably gave too much away, but look at Lynas up by 5%. American Rare Earths, talk about the right place, right time, even if it is, nomenclature, but American Rare Earths is up by 22, well, close to 23%. So just looking to see any further news associated with that. Now, it's just, rare earths processing going well. We learned that yesterday. It's seeing a bit of a breakthrough and completion of the impurity removal tests, but it's really the overall thematic that is driving that sector higher. Here's a look at the gold miners, which, let's see if they work today. Doesn't look like it. Okay, so the gold miners, Northern Star up by 3%. We've got Evolution up by a more muted 1.7%, but Newmont up by 4.5%. You'll just have to trust me on that one. And we had the banks come up in today's episode of The Call. We started by talking about Westpac, but a lot of the attention ended up going to ANZ in the commentary. Still up, so putting on further gains, adding to yesterday's position as the bank unveiled its super simple strategy. Sean Hickman from Market Matters actually said that, it read quite simply to him and pretty strong as well. So let's take a look. There we go. There are some of the silver plays as well. Silver hit a record high on Monday, and that is because we've got a bit of a silver squeeze going on in London and just, the safe haven buying that we're seeing. And you know what that's all related to. Look, Unico Silver, stick around. You might hear some more on that one. So to some of the news, starting in the resources space, Rio Tinto flagging its iron ore production is expected to come in at the lower end of guidance for calendar year 2025. However, it's hiking its bauxite production guidance, and copper production is expected to be at the higher end of the range. Paladin, as I mentioned, the ramp up at its Langer Heinrich mine is continuing according to plan, with total material mined up 63% from the previous quarter. Deep Yellow, meantime, says that recent drilling at its S-Bend prospect in Namibia has confirmed high-grade uranium. Santos Chief Financial Officer Sherry Du has resigned after a year in the role. And Brazilian Rare Earths is tracking higher, with the firm raising $120 million to extend the development of its rare earths project in Brazil. Meanwhile, Ansell has reported a cyber attack. Shares, though, still up by 0.75% today. And it's the end of an era, the end of the listing era for Johns Lyng. Its shares will be suspended from the ASX at the end of today's trade after the Supreme Court of New South Wales approved its takeover. Yeah, by about 0.25% today. That was once a market darling, and it was ripe for private equity and was plucked off the boards. All right, a very warm welcome to the COB, George Babouris, who's joining us from K2 Asset Management. George, welcome. Look, I just would like to get, your sentiment. How are you feeling as an investor when you see some of the wibbles and wobbles that we've seen this October?
Yeah, it's just last Friday, that was the wobble, but the overgeneralization is buy on retracement, buy on dip, given that you broadly have a accommodative monetary policy in the Western world, particularly driven by the US. It won't be a deep interest rate cut cycle, but that's not the point. It's very supportive, and given that sort of framework, and that, let's start with the US, the earnings framework in the US from an aggregate perspective is reasonable. It's expensive, but once you get out of technology, the earnings multiple is much lower, but there's a bit more pressure on the EPS and the denominator outside of the major technology. But broadly, we've been playing it that those overweights to be trimming here and there, but we quite like the market, and that's on the equities, and likewise with high yield and investment grade credit. There was some wobbles on Friday with the sub-investment grade, but generally holding up. So we've been quite happy with the performance, particularly since that correction that was quite severe in April. So accommodative, monetary policy, government footprint in the Western world, still a big part of that, driving the consumption and the consumption and government expenditure within the GDP sort of template and framework. But overall, it's quite reasonable. It's just that the correction on Friday wasn't long enough to be able to get people to participate, but there'll be many more pockets of volatility, my final point, in coming months to participate.
So just to pull apart some of that, I mean, you bring up a good point. We've got quarterly earnings expected to come through from the United States. So do you think that will reinforce some of the, really the resilience that most parts of the market have shown, even in the face of slowing in the jobs market?
Spot on, but this can be a volatility event. Let me make the framework. So EPS for the first half of this year in the US has been revised higher from an annualized perspective, high single digits to low double digits. It's its fourth mature year of double-digit EPS growth, very resilient in aggregate. But done officially begins this week with some of the banks, but full on from next week and the weeks after. This is our litmus test and our report card, because obviously economic data is lacking in the US for obvious reasons for the next couple of weeks. So the guidance is important here. So we've already upgraded the momentum of EPS for North America. Can we upgrade it again going from this point? Possible, but improbable. So it looks quite fully valued. And that is why I think the opportunity will be, depending on the Fed accommodation, is that Russell 2000 mid-cap space, or definitely the valuations are much more compelling. You're not paying $23 for a dollar of earnings outside of the major technology areas. You're really getting that 14 to 15 times of some of the small caps, notwithstanding there's some gearing in there in North America. But this reporting period would have a bit more of an impact, but just the opposite of what September was normally a volatile month, and it wasn't. It was a strong month because of the low interest rate cycle. So this reporting season is quite important because it's very difficult to maintain that upgrades that we got to EPS in the expectations.
So we could see volatility inspired by this upcoming earnings season. Now, when I bring it back to the Australian market, George, we've got a lot of focus right now, obviously, because we are a very resource-heavy index. Just look at what's happening with the gold miners. Copper plays also rebounding nicely, rare earths as well. Does this bode well for our market toward the end of the year? Oops, it looks like George is a bit frozen there. So what I might do is run you through our stock of the day, which relates to what I was just talking about regardless. We'll see if we can get George back. Unico Silver was picked by Michael Wave from Medallion Financial, along with the Global X Physical Structured ETF by Sean Hickman from Market Matters, because I asked them, of course, how do they gain exposure to this soaring silver price?
Feel as though it's one of those momentum areas that could continue to run for some time, and therefore we want to have some exposure to silver just in case markets get extra silly, and silver could be up at $70-80 given the rate that it's been trading.
It's a bit skinny on the ASX.
Yeah.
I think I sent through to you that we would just go via an ETF. I'm not sure if you've got the one up. That's the ETP mag. It's a very, very simple way of playing silver. You're effectively buying silver bars. You haven't got to worry about storing it. You haven't got to worry about insuring it. They do all that for you. Silver goes up, it goes up. Silver goes down, it goes down. We're bullish silver. We've been bullish silver and gold all year. We took profit on our gold position, one of our gold positions, way too early a couple of weeks ago on the show. I told people when we took profit on Evolution. So it's kept going harder than we thought it would. As silver. Silver's in the press at the moment because there's a short squeeze of physical silver in London primarily.
And to the market leaders, we've got Iluka Resources. So it saw its price target lifted 8% to $7.10 by Macquarie. So you can see where its share price is trading today at $8.85. But there's just a whole heap of enthusiasm around the rare earths, around the critical minerals complex, because of the trade tensions that, continue to bubble and boil away in the background. Deep yellow, we mentioned why it's up by 12.5%, close to 13%. HMC Capital is also doing really well today. I'm not seeing any reason why, but putting on a pretty solid 9%. And Paladin, again, on that Langer Heinrich production update coming through the quarterly results. So looking good there for the leaderboard. The flip side, though, Drone Shield. It was a mention on the call today. You might want to take a listen to see what the guys had to say. Obviously, our viewer had said, have I missed the boat? Well, yeah, let's see what they say. But today, down by 6.6%. Web Travel Group is off as well, shedding about 3%. Its price target was cut by 5.9% to $4 per share by Morgan Stanley. Bendigo and Adelaide Bank, Temple & Webster also came up on the call today. And Austal in that mega hot defensive space, along with Drone Shield. Just a bit of heat coming out of that, maybe perhaps going into that critical minerals, rare earths narrative. Okay, Australian strategic minerals up by 65%. European lithium doing really well, putting on 52%. So there's a story there on your screen. Let's get across the laggards, and Elcite is off by 8.2%, and Cettire, that retailer, shedding 8% to 73 cents per share. Well, tonight we hear from the federal chair, Jerome Powell. He is speaking at the National Association for Business Economics annual meeting. And in the U.S., the NFIB Small Business Optimism Index is released for the month of September. So we're looking forward to hearing from JP Morgan Chase, Goldman Sachs, Wells Fargo, Citigroup, and Domino's Pizza coming up. So to George Boboris's point, some volatility potentially coming our way through the quarterly reporting season. And as far as tomorrow here, we get building activity for the June quarter. And after hearing the RBA Governor Michelle Bullock speaking today, we'll be hearing from Assistant Governor Sarah Hunter at the Citi Investment Conference. We have our cameras there. In fact, we're a proud media partner of the Citi Australia New Zealand Investment Conference, and we'll be bringing you a lot of that content tomorrow. Looking forward to hearing from those Citi analysts at that. All right, so it is a goodbye from me, a goodbye from us for the day today. Look, you can always catch up with what you've missed online. 8,899 is where the local market, the S&P ASX 200, finished, up by 0.2%. Just watching some of that pressure coming through on U.S. futures. I mean, there's a lot sort of still happening on the China-U.S. trading front. The U.S. and China today will begin charging additional port fees on those firms that move pretty much everything, including toys, crude oil. So the high seas are sort of what Reuters is calling the next front in the trade war between the world's largest economies. Yeah, we've still got Asian markets, as I said, pretty hesitant. We got the Japan's Nikkei fretting as the market is taking on this new premiership as well. And still seeing gold hitting record highs, silver following suit. If you've missed anything, as I said, catch up online. We look forward to seeing you tomorrow.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.